Welcome back. As promised, let's talk markets. Pawan Parakh, the founder of Renaissance Investment Managers, is with us on the show now. Pawan, how comfortable are you with the markets at these levels, the valuations, the run-up that we've seen in the last 3 months? Are you recommending any profit booking? And if yes, which would be the pockets where valuations have gotten a bit overheated?
No, honestly, I think markets are just fairly valued. I don't think markets are overvalued. So there's no sense in making a case for a profit booking. In fact, we are advising investors to invest more at current times, because if you look at the markets, after a long time, we see that both macros and micros, so macro in terms of, say, gross collections, inflation, micros in terms of balance sheets, growth plans, everything seems to be fallen in place. So if one were to take a 2-year view, it's very difficult to make a negative case for any of these sectors. It's a very strong wave which lifts all boards. So essentially, in our view, market seems to be for a good times ahead. So doesn't seem to be case of profit booking on this.
Okay. Hi, Pawan. So what's sort of the premise with which you are now stepping into the second half? We were just telling viewers about our fund managers poll, and it seems that everybody wants to stay invested. Not too many people are talking about taking profits off the table just yet. A, do you agree with that that strategy? And B, if you are to put fresh money to work now, then what areas of the market are you looking at?
Right. So actually, if you see, there are several sectors and several themes which are working for India after, say, a decade-long hiatus. Look at the entire manufacturing story, capex cycle, real estate. So if you look at the last decade, anything and everything related to consumption did well, be it consumption finance, be it consumption staples, be it consumption discretionary. But a lot of the other sectors were completely in back burner, and all of these sectors which have now come back will stay here for at least next 4, 5, 6 years. And if you see, India is a growth story in an otherwise very, very, very muted global environment. FII flows of late have been okay, but if you take a 2-year view, I don't think we've got very strong FII flows, which will start coming back as and when global things stabilize. So if you look at from growth perspective, if you look at from flow perspective, markets seem to be good, and there are several new sectors in terms of infrastructure, in terms of manufacturing, in terms of real estate, and proxy to the real estate in terms of building materials. And more importantly, I would like to highlight that over the last 2 years, we've seen several tech IPOs which were at crazy valuations. After the recent corrections, a lot of them look pretty reasonable. So there are several pockets which are available to invest, and taking a 2-3 year view, we see a decent upside in a lot of these stories, honestly.
Okay. Decent upside. Just talking a bit about the micro markets. Any thoughts on jewelry companies? They've reported some phenomenal numbers. Do you look at this pocket?
Yeah,
and is it sustainable?
Yeah, I think that is very sustainable in my opinion, because a lot of these companies in the organized space are expanding their retail footprint. Over the last 1 year, ever since hallmarking has become compulsory, we've been of the view that organized sector will gain a sizable market share from the unorganized players. I don't think this is going to happen overnight. It's a slow story. So if you look at the largest jewelry company on the listed space, they just have about 400 odd showrooms in the country. The second guy is just about 200. And if you look at the entire organized sector, there's just about 1,000 odd stores in a country of 140 crore population, which is very large spread. And by the way, gold jewelry has a very good demand in a country like India, despite whatever per capita income that we have. So take a 3, 4, 5 year view. I feel very, very, very confident on this space.
Okay. And in real estate, which are the pockets and themes which look good to you, and any themes that you would avoid? Any markets particularly?
So I must tell you, we did some channel checks in some of the top 3, 4, 5 cities in the country, and we came out extremely positive. Bombay, we all know about Bombay real estate. It hadn't done so very badly over the last 5, 10 years, but some of the other pockets like Delhi, Bangalore had seen a very bad last 10 years, and now the demand is very, very, very strong. I'm sure you're tracking the numbers from DLF and a lot of other of these real estate players. But as far as our equity market point of view is concerned, we are playing less of real estate developers. We are playing this story through building materials, because that is where we see balance sheets far more comfortable, management far more comfortable, and valuations are also reasonable. So that is how we are playing this sector.
Pankaj, out of time. Thank you very much for joining in. Next time, hopefully, will be a little longer. Get into a break. We'll come back with more.